The Indian rupee dropped past 86 per US dollar for the first time ever on Monday this week. As we speak, $1 is equal to 86.62 rupees, and market experts believe that it might soon touch 87. Hello, my name is Abhinav Trivedi, and you're watching Mint Explains. Let us make this very simple for you. There are 4 reasons why this is happening. The first reason is Donald Trump and his US dollar. Now, the recent non-farm payrolls data pointed out to a healthy US labor market. What does that mean? It means the country's economy, United States in this case, has added more jobs than expected in December, reinforcing that it's unlikely that their central bank, US Fed, will slash rates anytime soon. Therefore, the borrowing costs will remain higher for longer, boosting the dollar and pushing the US Treasury yields to a multi-month high. On the other hand, Donald Trump is expected to assume the presidency on January 20th, and 2 key decisions are awaited. First, his stance on tariffs, trade and sanctions, to which he has pointed out that he would be very aggressive to save the dollar's position. Number 2, the US debt ceiling is likely to be pushed further under his presidency. Now, speculation is rife that all these 3 decisions will likely work in the favor of the dollar, and therefore, strong dollar is driving the rupee down. Second reason are international crude oil prices. Now again, Donald Trump and his presidency is likely to play a key role here. A record surge in crude oil prices, which as of now has touched $81 a barrel. The US Treasury imposed broader sanctions on Russian oil producers last week amid the Russia-Ukraine war. Now, the sanctions on trade target the revenue and profits Moscow has used to fund its military war with Ukraine. Now, more expensive oil means more money for India to spend, which is one of the largest importers of oil in the world. Number 3, FPIs and FIIs. Now, FIIs and FPIs have also played a significant role in the current rupee downfall. Foreign portfolio investors have pulled out 22,194 crore rupees till January 10th of this year, after a 16,982 crore sell-off in December last year. Not only that, the FIIs began 2025 with a $2 billion sell-off in just 7 days. Not a very happy new year for the Indian equities. Indian equities are suffering from high valuations and low earnings, which has prompted foreign investors to invest in China, which has also been promoting its economic reforms. All this is prompting foreign investors to buy China and sell India over the last few months. What has added to the situation is weak domestic earnings. As weak domestic earnings and correction in valuations leads to a drop in Sensex, like it happened yesterday, the foreign investors are pulling out of the Indian market, which is not giving good returns. Domestic institutional investors are on their guards. They are the ones investing heavily in the Indian equities. Last reason, RBI's change of currency strategy. Now, the rupee has been in a downward spiral for over 3 months, while its volatility gauges have kicked higher. India's rupee volatility has jumped to its highest level. Another big reason is speculation that the nation's central bank, RBI in this case, may be easing its tight grip on the currency amid a strong dollar. Now, traders say the spike suggests a possible shift in the Reserve Bank of India's currency strategy. What is that supposed to mean? Mitul Kotecha, head of Asian Forex and Emerging Macro Strategy at Barclays, spoke to Mint and said that we think that the RBI may actually allow a little more volatility given the various risks of low volatility, such as complacency in terms of domestic hedging activity. Capping rupee volatility means that the currency may not adjust as quickly and could be prone to eventually larger moves. On Monday, the RBI sold dollars to save the rupee, but less aggressively than it has in the past. As rupee braces for more volatility, the country braces for more inflation. A stronger rupee indicates expensive imports, including crude oil. Now, this results in high transportation costs and eventually impacts prices of everything from vegetables to foods and daily household items which reach your doorstep or the grocery shop near you through transportation. Now, some might say that it benefits exports, but the demand for Indian exports is still in a developing stage. But it's a long story, ladies and gentlemen. As of now, the rupee is falling, and this is a developing story, and we at Mint shall keep you posted.